Here is your global markets roundup, where artificial intelligence momentum continues to drive equities higher, even as investors closely watch inflation risks, interest rates, and high-level US-China diplomacy. Global equities rose on Thursday as investors focused on strong artificial intelligence-driven momentum and largely brushed aside concerns about higher interest rates and geopolitical uncertainty. A high-profile summit between US President Donald Trump and Chinese President Xi Jinping delivered few surprises. She said trade talks were making progress but warned that disagreements over Taiwan could seriously damage relations. Market reaction remained muted, with investors saying the lack of negative headlines was enough to support risk appetite. European futures pointed to a strong open, while US stock futures edged 0.13% higher. China's blue-chip index CSI 300 slipped around 0.8% after earlier hitting its highest level since 2021. At the same time, the yuan strengthened to a 3-year high against the US dollar, reflecting broader confidence in the Chinese currency despite ongoing geopolitical uncertainty. Across Asia, technology-driven gains continued to dominate sentiment. Japan's Nikkei 225 index hit a fresh all-time high, supported by strong earnings linked to artificial intelligence demand. In South Korea, the Kospi gave up some early gains but still managed a modest rise. Chipmaker SK hynix surged further, moving closer to a $1 trillion valuation and cementing its position as one of the biggest beneficiaries of the global AI boom. MSCI's Asia-Pacific Index excluding Japan rose 0.2%, hovering near record levels. Analysts say markets are increasingly split between two narratives: strong AI-driven earnings on one hand, and rising geopolitical and energy risks on the other. While investors continue to buy into growth and technology, concerns remain that elevated oil prices and unresolved Middle East tensions could reintroduce inflation pressures. Brent crude futures hovered just above $105 a barrel, while US West Texas Intermediate stayed above $101, both well above pre-conflict levels. In currency markets, the US dollar held firm as traders priced in the possibility that the Federal Reserve could lean toward further rate hikes after recent inflation data came in hotter than expected. The euro slipped to around $1.17, while sterling weakened amid domestic political uncertainty in the United Kingdom. The Japanese yen remained under pressure near 158 per dollar, keeping markets alert to potential intervention by Japanese authorities following recent sharp moves. U.S. Treasury yields remained near multi-week highs. The 2-year yield hovered just under 4%, while the 10-year yield stayed close to 4.47%, reflecting expectations that interest rates may stay higher for longer as inflation pressures persist. That was your global markets roundup. Equities continue to be driven by artificial intelligence optimism, while investors balance inflation risks, rising bond yields, and cautious signals from US-China diplomacy.